Welcome back to the show. I'm your host, Encore, and today we have Matt Speare, who's the COO of Carter Bank. Welcome to the show.
Thanks very much, Encore.
So, Matt, just to start off the show, what does Carter Bank do? And then maybe could you share a little bit more about your own journey leading up to the current role that you're at with Carter Bank?
Hey, absolutely. So one, you would classify us as kind of your traditional community bank that we just happen to be at the larger end of the scale for that. And I guess you'd say the normal kind of banking type of account. So, we take deposits, make loans, and nothing overly fancy. So your traditional banking model.
Perfect. No, I think that makes sense. And you have a rich background, right? So I know you worked at M&T and Regions. Curious what that journey was like, having navigated across many, what I would say is like fairly complex banking organizations before you landed at Carter.
Yeah, absolutely. And so, one, a not traditional career path, in that, I spent a bunch of years as an attack helicopter pilot for the U.S. Army, and then went into banking, and and so started out as a network engineer, and then kind of rounded out my IT skill sets over the years, and then had the opportunity to work in some larger and complex organizations and continue to hone those skills, and then have had the opportunity to be responsible for not just the technology, but you'd say the vast majority of back office operations for our bank at Carter Bank, so that we can support the front line as effectively as possible. But it's been a great journey, and I can tell you, I love community banking because then you can get intimate with customers.
So for the audience's sake, what makes community banks different from, let's say, the banks that maybe more of the audience is familiar with? Let's say they're J.P. Morgan or their Citi or Bank of America, or perhaps even regional banks, right? I think community banks are very interesting in their own regard, and for the audience's sake, would be great if you go into what makes them so special.
Yeah, absolutely. And so what you find is that, one, they have much less of a geographic reach than the regionals or national banks. And so they are more embedded into the particular communities that they serve. And so what you'll find as an example is that, they'll have a high market presence in a particular town or county. But typically community banks, as an example, you won't find in major metropolitan areas. And so, you've got the big banks that are really focused on the major growth areas and metropolitan markets, and then the rest of us that are kind of filling out everything in between.
So if I imagine you feel closer to the customer base and it's a little bit more tangible in terms of how connected you feel. So in that space within community banks, we focus a lot on newer trends, particularly with technology, right? And given your background, your experience, I'm very curious, what opportunities do you see for generative AI to be helpful at Carter Bank, and the different areas of business that you do?
Yeah, absolutely. And so certainly the areas that, we're thinking about how to best apply it is, one, I think that, just in general, in the ability to be able to gain a deeper relationship with the customer, that most community banks have not done a good job with leveraging their customer data to find those opportunities and be able to do it at any level of scale. So between personalization of marketing offers, as well as the personalization of the experience for the customer, will help be able to deepen that relationship so that when their next need comes along, you want for them to think of you or us first.
Mhm.
And every bank in the country is also, you would say that of those 10,000 banks and credit unions in the U.S., that, well, the vast majority of them are community bank or smaller. And so how can you leverage it, AI, to be more competitive and being able to get a deeper share of the customer's business, and then have that personalized experience so that they want to continue with that versus just being another number.
Mhm. Yeah, I think that's right. I think banking historically has been viewed as a necessity. You need to have bank accounts, you transact out of them, but it hasn't felt very personal. You don't think about your banker or your bank as an individual or even a team of individuals that could be there and support you. In fact, it's been the complete opposite. It feels very much like a faceless organization, hard to reach anyone, sometimes even over the phone line, right? You certainly can't email them to ask questions. And so I think you're absolutely right. I think AI allows you to deliver a personalized experience for the first time because you could do that at scale, leveraging a lot of great data that banks are able to gather from just basic transactions that the customers do. So what is the major challenge to making that happen today? Is it the data side of the house? Is it the machine learning that needs to happen on top of that data? And I know, of course, in this space, I have to ask, there's legal and regulatory issues in
Yeah.
consideration. So I'm curious what the major maybe challenges are to getting it over the line.
Yeah, and I think that it really comes down to three major issues for banks in the sub $10 billion asset size. Number one, internal skill sets. So if that the employees don't understand what AI is in the first place, then there's going to be a steep learning curve to be able to help them come up with methods to be able to leverage it. Number two, the underlying systems really don't support it today. So the example would be that in order for an AI model to really be able to do personalized marketing, it may have to be able to have to aggregate data from multiple different systems. And unfortunately, when you look at most banking systems, they're not open APIs. And so somehow you've got to get that data into the right spot to be able to leverage it. And then I think that, the third major issue is that, to your point, on the regulatory side, so the challenge that you would have, as an example, in automating credit underwriting is that if you can, in a traditional system, have defined logic that will then determine, whether you're going to extend credit to that, into that individual or business, then you can defend it. However, if you are using an AI algorithm that you're not sure that you can really prove is working the way that it should be or that it is designed, well, then you are just asking for trouble with the regulators because then all of a sudden
Mhm.
you get into areas of disparate treatment that we have all, things like Community Reinvestment Act and disparate treatment that you want to avoid at all costs because that will bring a lot of regulatory criticism.
Yeah. Yeah, no, I think that's right, Matt. I think what we've seen, and this deeply, like what you're saying, resonates with what we've heard and what we do, is you have to pick your lanes appropriately. I think if you pick the wrong lanes, like you try to do underwriting and have underwriting decisions made by AI, all of a sudden you could run afoul of the regulatory environment. And frankly, that's too much of a leap in most cases for the bank itself and then also the employees to jump to, right? And so we like solving what I would say is more of the simple, repetitive work that the team does internally that they don't want to be doing. And the beauty of that is that if you kind of take that off their plate, they're going to be very happy. So they largely embrace new technology because it makes their lives easier, allows them to do more interesting work. And because it's only doing the first tranche of the workflow, there are many pairs of human eyes that still go and see it and kind of move that forward. So the final judgment, final decision, that agency remains with people, right? And that allows you to go and inject AI. It really is AI, but you do it in baby steps. So there is more adoption and trust that's built up at all levels, employees, organization level, and then with regulators. And then eventually you touch more and more of the process, right? But I think trying to do too much, picking the wrong lanes, can set up institutions for failure, right? So managing that, I think, is a major challenge.
I could not agree with you more because I really look at this that none of us, I would say, in the community banking space should be swinging for the fences, to use a baseball analogy. There's while you can read a lot of the studies and whether it's reports from some of the big consulting firms that you can have 30 to 40% enterprise efficiency gains is not a reality. And however, I think that when you kind of just look at the raw numbers, if you can get over the course of 3 years a 5% efficiency gain, well, that would be incredibly big. And you do that by doing a lot of, I guess you would say, hitting a bunch of singles
Yeah.
to help you. And it also gets you in that cycle internally that once you have defined successes or have defined successes at a smaller level, then you can continue to roll them out. And I'll use this example. Years ago, when we put in, RPA slash intelligent automation, did we swing for the fences in the beginning? No. We had to learn how to work with it, culturally, and then start out with some defined use cases and make them work. And then you become more familiar both with the platform and how to think about it. And next thing you know, we've got nearly 400 automated workflows via a tool. And I think it's going to be the exact same kind of experience that would be most successful for, the lower end of the banking world, that you'll be able to get those small incremental successes and just continue to build on them.
I think that's right. And I'm very curious now that you've mentioned it, RPA, right? That's a particular way of doing automation. And for the benefit of the audience, it's building software bots to figure out what people are doing on screen. Maybe they're using their keyboard or mouse, but trying to go and basically learn from those steps and processes and then replicate them. And then I think you have newer generation of automation, which is generative. I mean, I've heard even new terms like generative process automation. So instead of
Mhm.
robotic, it's generative, which makes sense because the large language models underpin that, which is part of Gen AI. But having that be a mainstay of doing automation, which is a different type of automation, frankly, in my mind, it complements a lot of what RPA does, but it
Mhm.
allows you to tackle different workflows that RPA couldn't tackle. And so the two work well together. But based on your experience, where has RPA been very helpful? What types of workflows? And then what workflows was RPA perhaps not able to tackle that you're optimistic and hopeful for that maybe a generative process could?
Yeah, absolutely. So, intelligent automation slash RPA is very effective when you can define the process, given a certain set of inputs, you're expecting a certain result to happen, and for it to happen over and over and over again. That falls short is where you have the need for there to be, I guess you'd say, a human in the loop, because it's a gray area, and you would actually want a decision to be made using kind of a cognitive
Mhm.
type of thought process. Well, the bot can't do that. And because unfortunately, you can't predefine every piece of Boolean logic, in
Mhm.
one of those workflows. And so I think that's where the great opportunity is for it to be able to, let's say you have Boolean logic for the first 10 steps in a process, but then ultimately that there needs to be more of a human-like decision. That's where AI could play a huge role in helping to automate that decision based upon all the different inputs. And then you could have the actual bot tasks go on and continue down different paths based upon that, I guess you'd say, the AI in the loop.
I think that's a great description. I've often seen it described the following way, which is that RPA is really good at handwork. So what people are kind of using their mouse or using their keyboard to do, and there are sort of predefined steps that are very regimented. It's really good at kind of keeping the lanes exactly intact and doing that same flow over and over again. Now you could define many flows, but it handles more explicit black and white flows much, much better. Now, if the flow changes, or if it requires a little bit of more of what I would say is like not hand activity, but brain activity, so you need to do a little bit of reasoning and judgment, that brain activity is really ripe for generative AI to automate. I'm curious if you see it the same way, and if
I
you
do.
do, which workflows have you been able to solve well with RPA? And then I think looking ahead, which workflows are you hopeful that basically Gen AI could help solve?
Absolutely. So, here I think it would be kind of the prime example. We as banks, so one of our requirements is around, knowing your customer. So part of that is for every new customer that you need to do some kind of negative news search on that customer to find out, is this someone that we really should be doing business with? I mean, certainly you would say the logic-based OFAC checks, and then national databases like EWS to find out, did they defraud other banks, and so they're on the watch list. But then when ultimately you can build something to go and do a search of the internet on that individual or business and then provide information back to you. Well, what you find is everybody, that's listened to this podcast has done it before, that you do a search term in Google or whatever search engine you would like to get. And there's some of that stuff that's pertinent. A whole bunch of it has nothing to do with what you were looking for, probably because of the way that you typed in the prompt request on it. So I think that's where it really has, instead of then having all those results that then a person is going to have to through to ultimately make a decision as to, is this someone we want to do business or not? That's a perfect use case for leveraging the generative AI to be able to come back and then, I guess you would say, make somewhat of an informed decision or recommendation versus hours and hours of people looking at the results. And then, if you think about that, AI in the loop with that recommendation can then hand it back off to the bot test and go in and automatically go through the process of closing the account if necessary.
I love that. I love that. It's you have RPA that's doing already some of this work. Some of it that's black and white, so checking against bad actor databases, like you're mentioning, right? That is something that RPA could do because it's checking, seeing if the name is present there or not, right? Where it struggles are more open context problems, where it does a Google search, it gets a lot of different types of context, and then it needs to make a judgment decision, right? And that judgment decision is something that generative AI automation is much better suited to do. And then it can make a recommendation. It doesn't have to be a final decision, but that recommendation is really valuable to the person, the employee in the loop, that is going to then review the AI recommendation even in the early days to say, yes, I agree with the recommendation or not. And then the beauty of this is that you can have the AI learn from prior decisions that were made by your internal
Exactly.
team. So it's already seeded with some really great context. But in the go forward basis, because you still in the early days have maybe review of all of the recommendations, you provide the AI with more signals. And so it's getting better and better over time to the point where it's going to be spot on for the vast majority of the cases. And then it just makes the whole process a lot faster, and you need less people effort to do it because it's very administrative in nature at the end of the day, right? And this is a type of work that generative AI is really well suited to solve. And then as you mentioned rightfully, RPA then can continue that workflow downstream once you get that brain activity done by the LLM component.
Absolutely agree with you. And I think that the combination of RPA with AI capabilities is going to be incredibly powerful because unfortunately, with most banking systems out there, really to make adjustments in them, they don't have APIs available. You
Mhm.
have to do it through the front end. Well, AI is not going to do that. However, AI can help with the decision to then send it over to the brains of the RPA tool to then go and take the necessary actions.
That's exactly right. I think the integration, which you mentioned earlier, and I do want to touch on that, is a major challenge in the world of banking. I mean, it's also true in healthcare, and insurance, and other spaces. But in a lot of the tooling, a lot of the platforms and the workbenches that are the mainstays in these verticals, they have been built over decades, right? They've been around for a long
Absolutely.
time. A lot of the vendors that own these workbenches, they don't want to or maybe even could provide API access. And so the major challenge is you have to find the right ways to integrate the outputs from the AI into the front end where people operate. And RPA could be one of the mechanisms. You could modify databases directly that the front end renders the data from, but you have to find that way to get the applications one way or another. And if you don't, then you're stuck because now you have this co-pilot that's living kind of outside your web app, and then it actually introduces more complexity to the person because they're having to kind of look at multiple apps to try to stitch it together, right? So you need to kind of keep them in flow by powering their existing workbench. And if you don't get that right, a lot of that ROI that you thought would be realized doesn't get realized.
That is very, very true. Because I think, the typical challenge is that, outside of the very large banks that none of us build our own banking system. So we are kludging together a bunch of different vendors. And of course, every one of them was built at a different time with a different type of architecture. And some of them are delivered as software as a service. Some of them are mainframe based with no APIs available. And so it's, I guess you would say at the end of the day, that it's going to be a myriad of different techniques to be able to leverage the information that an AI response would come up with to be able to then take action in the underlying systems.
That's exactly right. It's funny you mentioned this because one common question I get asked in building multimodal is, we have a services piece that we do. It's so important to do that. The services piece for us is configuring the AI on the workflow that our customer has, and then making sure that the integration happens. We cannot just build the software and say, hey, go figure out how to integrate it. You have to go and get that integration done. Otherwise, your customer's not seeing the ROI that you sold them on, and everyone's going to be frustrated, right? So that services
Right.
piece is essential. It's just a prerequisite to getting in the door and getting the job done. So for us, it's a really important part, and I think you're justifying exactly why that services piece has to be there, right? Someone has to do the job, and as a vendor that is building in this space, you have to kind of do that alongside with your customer to make sure that they get the value that they signed up for. I think that's essential. I'm curious about the integration. So you mentioned the challenges of that and how that works. I'm curious how much of what you use you're able to replace. And the reason why I ask that is I've seen a lot of discussion among the founder community and the VC community that you could build Gen AI native platforms that maybe replace some of the legacy systems that you and others, your peers may use. How open or how disruptive is that? Is that even
Yeah.
possible for Carter, a bank like Carter, to do?
So I would say that, given our ecosystem of applications and, application services that we have in that, in the next couple of years, let's say, let's call it a 5-year horizon, I think that 10% could potentially be replaced. And then it gets a little bit harder after that. An example would be that, none of us would even consider replacing our banking core. And, however, there's those ancillary services. So think about it as things like online account opening that potentially you could replace a current provider by being able to leverage more dynamic techniques to be able to make the account opening process even faster and simpler type thing. And then there's certainly, areas in the back office where, we have to use third party data sources and somebody's got to log into this system to pull an extract to go in there versus why not just automate it and then leverage AI to help clean it? Because that's always one of the challenges is that when you have data pulled from multiple different sources, it's going to be named different things. It's going to be in different formats. So how can you use it as kind of a hyper ETL tool to help put that data together that you can then leverage it for further AI processes?
I love that. I think that is a great explanation of what is something you could replace, and then many other things that you cannot replace, right? So I think picking and choosing is going to be really important. I'm very curious in terms of adoption of AI. Is the data house in order for there to be an opportunity to do AI? And I feel, I mean, it seems like from this conversation, Carter Bank does have that data in order. But do you worry that some organizations, your peers or the broader space, maybe they haven't gone through the necessary legwork to get their data house in order, and so
Yeah.
now all of a sudden, because they haven't done the legwork to get their data side in order, they're going to actually miss out or be late to the game when it comes to adopting AI.
To be honest, I think that that's the case for about 95% of my peers. And that they just don't have the data in order. So in the world of banking, that well, when you get below $10 billion asset size, that the chances are incredibly high that you are going to be using a core banking system that is actually hosted by one of the big providers. And the only way that you're going to be able to get to the data is by some kind of report writer and which will extract it and put it into an Excel spreadsheet. So, unlike if you're a little bit more progressive and you can extract that data, and even if you're extracting, but put it into some kind of cloud data warehouse like a Snowflake, very easy to
Mhm.
implement, and then once it's there, you can leverage it. Unfortunately, that we see that most of our peer group out there that they're not even very good at report writing, let alone the whole concept of having the data exist in some kind of accessible data warehouse. And so I'd be honest, I think they're going to miss it. They're going to miss the opportunity unless they do something quite different in their internal infrastructure.
But just to play the devil's advocate for a second, Matt, why why the rush to AI then? It feels like a lot of your peers may be slow to the game, maybe not ready to adopt AI. Is there a real, I guess, hair on fire need to move quickly on the generative AI front, or could you take your time?
So I think that in general that it's one that it's going to be an evolution, not a revolution on it. One, you think about the human factor in that people are going to have to learn how to use it and how to think about using it. Then, based upon that, they're going to have to then take the steps necessary to get data in kind of the right kind of structure so that it can be leveraged. At the same time, there's going to be some that are going to move faster and they're going to get the opportunities and they're going to be able to leapfrog. And what will happen is that really AI's benefit is around efficiency and then ultimately, hopefully, with additional revenue generation. Because in the world of banking, I would say that, almost every bank in the U.S., that 90+% of their revenue is net interest margin. And so it's that 10% and there are certainly with that net interest margin, there are a bunch of things that are totally outside of our control. One, the market kind of defines what we have to offer on interest rates, so the cost of funding. And then there's only a certain level of acceptable interest that we can charge on loans. And so that difference in between is, our potential profit, but then you have to take out the expense side of it. And the only thing in our control in general is going to be that expense ratio. So the more efficient you can get, the higher level your profitability, which means that you can venture into more innovation and go
Mm-hmm.
after different customer sets and make investments. And so I think that it will be that kind of natural evolution where you will have 5% of the community banking space that's going to do this well. They're going to be more efficient, more effective, and they're going to get more of the revenue opportunity, and the rest are kind of going to somewhat get left behind.
That's very interesting, man. I tend to agree, having seen this space and seen prior cycles. I think that it may not seem like a competitive threat, but I think AI is like either it's an opportunity or it's going to be a threat. And I think that if you don't approach it as such, I think that you miss out. And what happens is that the ones that do adopt AI, they're getting more efficient, so they have more money to then innovate, which means that they grab more dollars, so their base grows, and so then it ends up being a kind of a perpetual cycle, right? Like a either virtuous spiral or negative spiral. And I think that's exactly the kind of the opportunity that's up for grabs in the next couple of years. What we often see though is if you look at the mortgage industry and loan origination, we came off of a couple of years of very, very hot years, very high demand, very hard to get enough loan officers in place to handle volume that was coming in, and speed to getting a decision out really mattered because the faster you get a decision out, the better chance you had of closing an applicant. Um,
Absolutely.
and it's funny because like now the housing market's cooled off a little bit given the interest rate environment, but at the same time, I think the institutions that experienced the pain last couple of years when the market was super hot, they know that if they had been more efficient with their loan officer function, let's say, they would have been able to get decisions out faster. They would have had to worry less about getting enough headcount to service all the applications that were coming in, and so they're looking at AI as a means to go and make their business more efficient. So when rates do come down and you have all this latent demand in the housing market that comes online, they're going to be the ones that win in a big way, right? So all of a sudden
I
they're
agree.
using these like what I'd say lean years to go get really, really efficient. Then when you have more flush years, they're going to be the primary beneficiaries. And the ones that thought, well, maybe they didn't need to move as fast, they're going to lose market share as a result, right? And I think that's sort of the story that I fear will play out for the organizations that are perhaps a bit too slow in making that move into AI.
I couldn't agree with you more, Alan, because when you think about lending just in general, that, I don't have any data to actually prove this, but, ancillarily, if you get the offer to the customer first, better than 50% of the time, you're getting a loan. And it's not like, 30 years ago where you go in and you apply for a mortgage and, somebody would get back to you and, it's instant gratification on it. So if you can, you know, make it so that workflow is incredibly fast and efficient by leveraging, AI to enhance the workforce, then chances are you're going to get a greater percentage of the opportunities. And that's all you can hope for as a bank, because if you can get 10% more of the loans that come in, boy, that's actually fairly decent money
Yeah.
in terms of profitability.
Yeah, and I think what I'm starting to see is that this is going to be the future of work, where AI is supporting employees to move more quickly, which has better outcomes not only for the customers. That is of course very important because customers will come back, they'll do repeat business, they'll have funds with institutions that feels like it's going to serve them better, right? They're faster at getting them application decisions, opening accounts, giving them personalized offers. But the employee aspect is also really important. The future of work play here, which is employees are going to be happier at institutions that adopt AI to do more of the repetitive admin work. And so the best institutions at adopting AI are also going to vie for the best talent, right? So if you're a loan officer, you look at two institutions and one has adopted AI and the work is just more efficient and you're having to do less grunt work. And you have another institution that is you're doing all the grunt work that you've always done in the past. Which one are you going to decide to build your career long term, right? So there's a professional talent aspect to this that I think also gets missed sometimes around AI.
Oh, I absolutely agree with you because, I think I think about over the last couple of years that, one of the things that we touted for some new employees was how, I guess you'd say progressive we were with automation, being the RPA side. Because to be honest, we, in comparison to our peer group, we do much more in that space. And so there's less, I guess you would say, that grunt work that many of them have to do. And I mean, who would, as an example, want to have a spreadsheet of 1,000 customer records that they have to go in and manually change one at a time? That would make you go brain dead. And versus, okay, I created the extract, I looked at it, yep, I'm feeding it over to the bot, let them do it, and it'll tell me when it's done.
I think that's right. I think that's right. So switching gears here, just for a second, I know you started off earlier on this podcast with the need for more personalization, right? So having personalized customer experiences and product recommendations and such. Where's Carter Bank on some of this, and where do you see there being a lot more potential in terms of delivering that level of personalization that you want as a community bank?
Yeah, and so where we are right now is we're kind of in the early stages, and it is data dependent. And so what we're doing is working through the models now for how we identify via the customer transaction records to determine who are they banking with that's not us. What are they doing with that third party bank? And then we're identify from there what are the things that we should actively be talking to, the next 10 customers that walk in the door on versus the next ones after that, and make it so that it's more of a prompt to the bankers that we should be talking about this because of the information that we can identify as a customer need, or we just know that we happen to have a better interest rate that's available or something that's advantageous. Because when you look at a customer checking account, and let's say that's the only thing that they have with you. Well, just off that customer checking account, you can pretty much find every other banking relationship they have. And from the description, you can find out what that banking relationship is for. And then based upon what occurs with payments, etc., over time, that you can come into a pretty good idea of what their current interest rate is with that other bank. So you could then, using that information, that the next time that that customer shows up in a branch, or you could even do it via pushing out
Mhm.
via a targeted offer in online or mobile, that you're not doing the shotgun blast of, hey, here's the latest marketing campaign about product X that everybody's going to get. No, here's our product portfolio. And out of the, 20 different products, here is the one that you should be talking to that customer about now. And I think, being able to leverage that AI to be able to, put that all together. So we're pretty excited about it and working through the models now. Hopefully, I would say towards the end of third quarter, at least have an initial phase of that launched out and then refine a little bit. But we think it's really going to help going into 2025 because we know we have lots of opportunities with our customers. But unless you dig through actual core banking system, customer by customer, you would never be able to do it in any level of scale.
I mean, I love this play because you see this all the time in other verticals like e-commerce, right? Amazon, of course, famously does this, has done it for a very long time. I think now, given where the technology is, it's possible for most organizations, I'm not going to say every, but most organizations have the tooling available. The skill set, of course, is a little bit harder to gather, but again, the barrier to entry is a lot lower, so you can do personalization faster, more efficiently, with fewer resources than ever before, right? And I think banking as a whole does not do a really great job. And I think you've laid it out perfectly, which is you have the data, all the data is there, even if it's just a single account. The transactions data is there. You can infer a lot about the individual from that transaction data, and then arm your bankers to go in and offer the right opportunities to those individuals. Now, when you think about personalization, is it more to empower your internal team to go and have the right context and the right recommendations to go and push out to the bank holders themselves, or do you view this as a direct to individual play where maybe as you mentioned you have a mailing campaign or you email them or you have a push notification, or is it a combination of the two?
I think it's actually a combination of them both. Whenever, and it kind of an anomaly that you find in the community banking space is that customers still really, focus on coming into the actual branch. And so, an example would be I'd say that 50% of all our consumer customers tend to go in the branch more than they actually are using online. And a good portion of them just will not use online. And so it has to be a combination. So you want to be able to prompt the banker to with the right information when that customer comes to a branch. But at the same time, for those that, are like me, that if I did not work in banking, there would be no reason for me to go to a bank branch. I could do everything online. So how are you going to reach me? Well, the only way is via a targeted push offer via online and mobile. And I think it is absolutely going to be a combination.
Yeah, and I love the beauty of that. It's like you have to adjust to user behavior and respond accordingly, right? So different users will have different mechanisms, and that's part of that's part of the personalization challenge as well. It's like who to reach out to, where and when and how in order to go in and improve the odds of converting them based on the recommendation you provide.
Yep, absolutely. But the great thing about it is then you can turn around and measure the success rate.
Hmm.
So, if as an example, there is no method today that when a customer comes into a branch and one of our bankers talks to them about a particular offering or product to be able to capture that we made the offer and now they open up the account versus when you have automation that is making the offer, but then because it's doing that based upon the information about the customer, you make the offer on day one, day 20 that they open up another account. That is a return on investment that you can actually measure.
Hmm. Yeah, and you could A/B test this. So for
That's
for the
right.
bankers and for the customer set that you have enough data to introduce AI for the personalization, or maybe you just do an A/B test just to see how effective the personalization strategy is going. You could see the conversion, you could see the follow through, and what it does to customer behavior beyond that. So I think it's an incredible experiment that's going to play out. Over the next couple of years. I'm curious at Carter, you obviously banking itself is a very competitive landscape. You're obviously a good larger player on the community banking side. Where do you see competitive threats from? Is it from larger banks within the ecosystem? Perhaps is it from some of the digital only banks, some of the fintechs that have cropped up. I'm curious what you view as your competitive set and where you think the pressure might be in the years to come.
Absolutely. So, still today, the number one competitor is the national banks. And so, just because that, they do an incredible job on the analytics to determine whether a community is worth investing in. And an example would be when they see an opportunity and it makes sense for them to all of a sudden put in a couple of branches into, a moderately sized community. Well, they're going to do it because they've got the data to prove out that it's probably going to work. And so see them as the number one. Yeah, amazingly enough, we do see that our customer base will on occasion use some of the fintech providers, but to a lower scale versus like major metro areas. So you would expect that, if somebody lives in San Francisco, New York City, Chicago, hey, they're going to use whatever they find to be the absolute simplest banking interface. And so they'll go with, the fintech type players. And but then in areas like Greensboro, North Carolina, or Martinsville, or parts of the footprint that we tend to operate more in, they still like having a personal relationship. And that's the big issue. Fintechs just can't develop a personal relationship. Sure, they'll have a great, cool interface and let you do all kinds of stuff online, but they're not going to answer the phone if you need to talk to somebody.
Yeah. Yeah, I think that's a huge differentiator and I think becomes more important in the age of AI. Now, if you could empower that face-to-face conversation with insights and
Yeah,
analytics with AI, then you get the best of both worlds, right? I think the beauty of native fintech players is that they have a lot of data. It's very clean and they're able to make insights and analytics and
yeah,
recommendations off of it. But if you marry that same capability with in person, I think that's going to be a very compelling. I think
I
that's
think
that's
so
kind
too.
of the thing that allows you to ward off any competition from fintechs that could emerge. And also, I think it helps with warding off the national bank threat, right?
That's right.
Trying to keep them at bay.
Yeah, because I think that the national ones, not to knock them at all. I mean, they're a great part of the overall, financial ecosystem in the U.S. Yeah, I think that that if you though, as an individual, just really would like to have a trusted advisor type of relationship, because at the end of the day, that we all work for a reason. It's to have the finances to get the, accomplish the kind of goals we would in life. Well, not the entire population smart enough to what to do with that and how to manage finances. So wouldn't it be better to have a actual trusted person that you can do it with that, oh, by the way, has all this data to help back them up to know how to personalize the service to you?
Yeah, it's the best of both worlds. I guess maybe one last thread here, which is, AI obviously is going to make companies more efficient. It's going to make people more efficient, right, by augmenting them with new capabilities. What does that mean for the workforce? So the people that are in these roles, or maybe let's say newer batches are trying to get into this space, is there, I would suppose, is that going to lead to fewer jobs? I'm sure it will in some ways, but is that necessarily a bad thing, or is that welcome given the demographic trends that you see in banking?
Sure. So, one, will there be, like major job losses? I actually think no. I think it will be a shift in what the workforce does. And so, as an example, that theoretically you don't need to have a branch. We have these things called ATMs,
Yeah.
ITMs, online and mobile banking. And people have been talking about the demise of the bank branch for, the last 20 years, and it's still not happened. And it's not going to happen anytime soon. However, and so when you think about, the crazy stuff like, hey, people still go, what's the number one reason that they go into bank branches? They got to make a deposit via check or cash, or, make a withdrawal and get cash, as an example, or talk to somebody about a loan. And I think that that will continue to happen. Our job is just to make those workers that are in that branch more efficient as well as more effective. And I think that's where AI fits in really well. And there will be that kind of shift that you'll have more knowledge workers that will be able to help, program the AIs to be able to create that level of efficiency and effectiveness. And so it's just simply going to shift.
I think that's right. Then the actual tasks that individuals in the roles do changes, and it has always changed, right? As you've seen newer and newer technology come in, but they just do different roles. They do different tasks as part of the role. So the nature of the role shifts, the task composition shifts, and usually for the better, right? I think that that's the beauty of it. But I think anything that overnight shifts in some dramatic way, I think the odds for that are basically zero. I mean, I agree with you. I think change happens also very slowly, right? So nothing immediate, and it's more evolution as opposed to something that's disruptive. Well, Matt, really appreciate having you on the show. I think these insights are incredible as banks like yours and our audience tries to figure out how to adopt AI in what they do and how to introduce it into the organization and how to do that in a way that is going to add value both in the short term, but then really paving the way for more long-term impact as we cover maybe more process and more of the work that people do. Thanks for being on the show. I really appreciate it. For people in the audience that want to learn more about you or Carter Bank, where could they turn to for more information?
Yeah, so you can find us at carterbank.com, and then don't hesitate to reach out to me. It's pretty simple, matt.spear@carterbank.com.
Perfect. Matt, it's been a pleasure having you on the show. Thanks for making the time.
Thank you, Ankar.